And good afternoon. Welcome into Market Talk for Monday, March 22nd. I am your host, Jesse Allen. Great to have you here with us. MarketTalkAg.com. That is our home on the web. MarketTalkAg.com. You can find us on Facebook, Twitter, Instagram, all at Market Talk Ag. All of our great radio affiliates as well on our website, our streaming sources, Spotify, Apple Podcasts, iHeartRadio, and more. You can find it all online at MarketTalkAg.com. Well, it's a Monday that was a fairly interesting day, I would say, in the market trade. We're gearing up for that prospective plantings report here at the end of the month, and let's talk about all of it. Let's bring in our good friend, our typical normal Monday guest. We always appreciate having him on, Bryan Doherty with Total Farm Marketing by Stuart Peterson. Bryan, good afternoon to you and a happy Monday.
Jesse, thank you, and happy Monday to you and your audience.
Appreciate you joining us once again. And man, oh man, taking a look at this market today. Bean oil took off to the races again, but that was pretty much about it on the grain side, wasn't it?
Yeah, kind of a head scratcher if you're friendly corn. You kind of got the news last week. I look at corn today, and May corn was down, and sometimes close to 10 lower. And you're wondering, geez, did I miss something last week? Because we had a net of over 150 million bushels sold to China. Had Monday last week export inspection, I believe was touted as a record. So it was huge, over 80 million bushels. And then we've got 77 million bushels today. So at least it appears on the export front, the news is positive. But still, corn is just stuck in this range, and maybe it'll take the end of the month to kind of shake it loose. When I say stuck, as an example, July corn is trading today exactly where it was back on January 13th. So when you look at that, we've gone over 2 months now of basically flat, rally up, gone flat. So that'll break out one way or the other here.
Mm-hmm. Well, and we're looking ahead to that prospective plantings report here in just a couple of next week. And I know that's going to be a big milestone on the road for us here. And you mentioned that corn market, and just looking overall at this marketplace, it just seems like that's going to be the next shot in the arm, one way or another. And I know we're starting to we're going to be getting some of those pre-report estimates out. Is there any chatter you're hearing of what we might see on the 31st?
Yeah, let's just call it the average estimate so far is about 93 million acres of corn. And so last year we were at 90.8. So you're talking a number just a little bit below last year. As far as the outlook forum, the USDA had 92 million. So that was back in February, the outlook forum. When you look at soybeans, they'll probably pick up the most ground, in particular in the Dakotas, where they had a lot of prevent plant last year. I would call those more fringe acres if you want to compare it to Illinois, Iowa, Indiana, where farmers are probably pretty rotational and kind of stuck in those rotations. So soybeans last year, looking at 90, the egg farm had 90 million. Some private estimates are a little bit lower than that. I got to think that the beans are a winner, though, in the Dakotas. And so we'll see how that unfolds. Right now, that ratio of December corn divided into November beans is holding around 2.6, and that would favor soybeans. And so far, our seed dealers in what I'm going to again call those fringe areas have told us that farmers have probably leaned more toward bean seed.
Well, it's definitely going to be an interesting thing to watch. And if I'm doing marketing right now and getting ready for spring planting, taking a look, I think maybe discrediting a little bit today, it seemed like an odd day in the market trade. But if I'm kind of planning to make some moves or get some sales on the books, what would be some good advice for growers right now, Bryan?
Yeah, so I think the advice is, look, there's nothing that's not on the table right now. That is, bulls have good arguments, bears have good arguments. Both are likely to happen. Volatility is likely to be high, even though I just talked about being flatline. That only lasts for so long, and then things break, and they usually break kind of sharp. So I think the advice is balance. Be balanced in your approach to marketing. Well, what does that mean? That means if you're selling old crop and you've got a good pay raise or you've sold some, reward the market, reward yourself, generate your cash flow. A lot of that has to do with logistics of when you can actually move the product and so on. And then go back into the market and retain some ownership with some kind of an option strategy where your risk is fixed. So what you did is you took away the greatest amount of risk, which is downside to you because that's real dollars that disappear, prices go down, and then you reinvested a portion of those dollars to the upside. So that's how I do the old crop. And actually, we'd focus on a new crop that way, but I might push a little bit more onto because of the inverse in the markets, push a little bit more on the concept or encourage the concept of using put options, Jesse, to establish a floor, leave the top side open. So that's an idea, but we're up high enough where farmers should be, at least according to Bryan Doherty, should be really thinking about getting some kind of cash sales on the books. This is a price we don't want to let slip through our hands.
Very, very true. Definitely, it seems like a lot of room for profit to be had here with where these prices are at. Brian, let's talk wheat here real quick. I know wheat growing areas getting some rain, getting some precipitation through the plains, Delta, southern Midwest, and that seems to be a bearish factor on this wheat market. Any signals you're seeing there we need to watch?
I think you just kind of hit them all. The signals are, what's the weather doing? Is it getting better or worse week to week? So
Yeah.
once you get into this season, I always argue, what are things better this week or not better this week? I would argue that compared to 3 weeks ago, we had really dry weather, then we had really cold weather. Now we did have the snow cover, and to my best guess, as I've talked to producers in wheat country, they've argued, look, if you were planted really late and were light on snow cover, that might have had some impact. If you had snow cover and planted wheat on time, the cold probably didn't matter. What matters is moisture, and now you've got moisture. So at least for now, it really bodes well for the idea that the crop might come out of this late winter, early spring in a lot better shape than what we would have thought just a couple of weeks ago. And really, the futures are reflecting that. So unfortunately, that probably limits upside for the wheat market at this point. And just in a general broad sweep, it looks like I would argue that European and Russian and Ukrainian weather are probably a little bit better off too.
Looking at South America real briefly, it seems like weather for their quartered soybean crop, for the most part, is getting better, more bearish to our markets with where the weather is turning down there. Any news you're getting from any contacts in South America, just how their crops are looking right now with better rains in spots that needed? It was really dry.
Right. The general thought was that rains were a little help or too late in Argentina. Rain is always helpful, I guess, in my book. So it either helps to stall things or stop the downgrade or helps to improve it. So I'd argue that maybe it's gotten a little better, but I'd certainly expect still, we didn't see it last month. We should see a downgrade to the Argentine corn crop. As far as Brazil, that's a real wild card. So pushing ahead with planting. Don't have a number for you right now where they are with the second crop. It was thought about 50% last week, 80% average. So they've made more ground, better planting opportunities for some. Still some wet pockets in Brazil that create problem with harvest and then getting a ground ready for the second crop corn. But overall, I think that's why corn too has stalled and gone sideways. And the bean market shows flashes of something positive, and then it seems to give it back the next day. So kind of stuck right now. There just really isn't any earth-shattering or new weather developments in the southern hemisphere to be the driver today or this last couple of weeks.
And looking as well, talking China, I know you mentioned that a little bit, but looking at the Chinese and just some of their market activity, and then of course, obviously, export sales and shipments. We didn't get those any sales to China today on corn after 5 straight days. We kind of talked about that a little bit, but just looking at the Chinese right now, it seemed interesting that they jumped into this market and bought old crop corn 5 days in a row. One has to wonder, some people thought, is that good faith purchases towards the U.S., the new administration, or what's going on with China right now? Any thoughts to that, Brian?
My thoughts are it's better to have inventory in hand in a contract than not. So you hear and see lots of things in the news and marketplace. One of the rumors, and I want to be careful because rumors are rumors, but that the Chinese are really looking at the late planted crop in Brazil, our general weather maps in the U.S. And you think about it, if you're a corn buyer and you see those things probably limiting production, As we've said before, we're kind of backed into a corner that there's really not a lot of room for error in production this year. So now why not buy it in advance? It's also a sign that just improving demand, strong demand, maybe the need is a little bit more far-reaching than we were kind of told earlier in the year. When I see early in the marketing year, when a couple typhoons in China was like, no, this looks like it's pretty much an average crop. But that was a tough one to think. Really, average crops, so typhoons lead to average crops. That's interesting. So it's probably just a combination of bird in hand, tight end inventory. Why wouldn't you buy it? Why wouldn't you make sure that you have it? You know, it's good quality corn in the U.S., and so why wouldn't you buy it? I guess is the way I look at it.
We varied our topics a little bit there on grains than we normally did, but it's always nice to get a few different perspectives from you, Bryan. Let's talk livestock. Let's shift our conversation there. Hog market seemed to struggle a little bit today outside of that front month April contract. I know those summer months, they broke back below that $100 kind of that psychological level here today. What are you seeing in this hog market? Are we hitting the top? Is this a momentary hiccup? It seems it's been back and forth as of late with this hog market. Just with trying to decide what direction it wants to go, and then usually it pushes higher and backs off a little bit, then pushes back higher. What are you seeing right now?
Well, the bullish argument today is simply that prices corrected down, fill the gap that they left on the chart, and now they're ready to resume their uptrend. That's predicated on tight supply. I think we looked at last week through the end of last week's slaughter numbers for the year down over 4%. So you've got tighter supply, and then you've got more demand. So it's kind of basic economics in 101 that you start moving those demand and curve or supply curve lines, and you get higher prices. The question is where to. When the market starts to really move, you start hearing all the different levels of where it can go to. And the problem that you have with that, at some point, it just runs out of gas. And so it seems to me like the $100 mark, that is our last resistance point several years ago. The next one's probably 120. There's been some talk of that. I don't know if we see the driving force today. We've talked about this for a long time, that in hogs, due to euthanasia and some of the issues, that you would end up likely seeing a loophole of tighter inventory about this time of year, and then we should start to see supply increase. And I would suspect that's where we're going to be. Yeah.
Let's talk cattle. Cattle seem to do all right today, and I know we're trying to find a reason to bump this cattle market higher. We've been stuck sideways for a couple months now. Cash trade, be interesting to see where that sets up this week. But that cattle on feed report came out Friday, was fairly neutral, and it seemed like that was something that, at least in the short run here today, helped out the cattle markets.
Yeah, well, the cattle market had a kind of a rough futures, had a rough week at the end of last week into the report. So if the market was anticipating something a little bit on the negative or went defensively postured in the report, those traders or hedgers were already in the market on the defensive side. So to see the market hold together and rebound today on a neutral report, good stuff. I think the where the market is right now, it really wants to see the demand come through in both hogs and cattle. We've talked about this decline in COVID, and by March, April, May, we continue to hear this talk that we'll see demands and restaurants opening and things like that. So the bigger kind of question for a lot of us is the market already ahead of itself? That is buying the rumor and now it's selling the fact. Apparently you go down in Miami this weekend and then it's wall to wall. So I don't know if that's good or bad, but in theory, people are out, they're willing to spend some money to celebrate, do this, do that, probably eat a little better. I know around here at home, highway system seems to be pretty solid. So I think the consumer is already back. The question is now, are they really ready to accelerate this? And I guess I would doubt it. There's just, this all takes time.
Well, and I would agree with you. I know things in Nashville are back up and getting back to more normal, we should say, here as well. Not quite like Miami Beach, though. Bryan, any shifting gears, any thoughts on the dairy market this week? Anything you're seeing there?
The same questions linger. Where is demand going to take the market? Because we saw the production report last week, slightly supportive. Is it enough to really make fundamental changes to the marketplace than what we've already seen? We saw the milk market off today. Deferred months on the board, $18 or better. Jesse, I'm still the opinion that producers should really look hard at least 25% of locking that in, taking it. Some of the Midwestern problems that have developed over the last half a decade have been negative PPDs, price producer differentials. And so $18 milk isn't bringing the cash or mailbox price that it used to bring. Probably bring $16 milk or $17 milk, or it depends where you are, where it used to probably bring close to $20 milk. So that's the struggle that producers have. Do I defend the futures price, or do I just wait it out and see if we can't get better cash price? So probably the place to be would be hedging the futures, and not necessarily cash at this point.
Well, Bryan, any other final thoughts for us here today as we wrap up the show? Anything else you want to reiterate for producers?
We're just getting kind of wound up tighter and tighter in where we started, the corn and soybean markets, and for a break. And the key is just that balance. Be prepared for a break in either direction. It's very easy when you tighten supply up to tip the scales to a bullish acceleration really fast. On the other hand, a lot of times we've been kind of thinking that's right ahead of us, and then it goes the other way. It just tips over. I call it a miss. The market has a miss, has an opportunity, but it misses. And when you miss, then all of a sudden we're struggling with downtrending markets when everybody's looking for uptrending markets. So I would say concentrate on the strategy. The strategy is preparation. It's being prepared. It's the old Boy Scout model. Take some time, prepare, and things will go pretty smooth when it's pretty rocky out there.
Well, Bryan, I know if producers need a little help, they can reach out to you and the great team there at Total Farm Marketing. They can find you guys online, a lot of great stuff on the website, or just give you guys a phone call, can't they?
Yeah, they sure can. And our number is 800-334-9779. Ask for Bryan Doherty. I'd be happy to take your call and spend a few minutes just learning more about your operation, your risk tolerances, your risk, and just ideas that we can kind of put in front of you that maybe make sense for you, or at least a starting point. That'd be the best way, though, just a quick phone call.
Well, Bryan, I appreciate the time as always. I know folks can find you online as well, totalfarmmarketing.com. Have a great rest of your Monday and a great week, and we'll talk to you again soon.
Thank you, Jesse.
Bryan Doherty with Total Farm Marketing, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Monday, March 22nd edition of the show. I'm Jesse Allen, wishing you a great afternoon.